Yeah, our economists actually just recently changed their view. We did have a February rate cut in our plans, and we've just pushed that out to May. So, that is extending that time period for borrowers. I think the consumer in Australia is, progressively going to see themselves in a better position during 25. So we've had tax cuts in Australia, which we've seen our customers certainly have been saving a higher proportion of that rather than spending. That's putting them in a slightly better spot than where they were. And then we'll progressively see rate cuts during 25. Our expectation is that starts in May and then hopefully reasonably progressive through there, which will progressively put those consumers in a better spot. There is always the risk that takes longer, and we're here to help those customers who are doing it tough as their buffers get more eroded with those higher rates. But I think we're hopeful for May. They've got a tough job, the RBA, trying to balance what they've got to balance. But look, it's hopefully May, and let's see.
Nathan, how bad could it get in terms of delinquencies and defaults, and how systemic could this problem become?
I think that the big indicators of those type of things is really around unemployment and asset prices, and so they're always the things that you look at when you're thinking about the banking balance sheet and what are the things that could really give adverse. And I think we're very optimistic for the economy in Australia and a soft landing. Our economist sees unemployment peaking at around 4.6%. These are very healthy numbers for the economy, which just means that the likelihood of a major spike or a major problem in the Australian banking sector is very low. So one, you look at the unemployment, and the other is you look at asset prices. And I think asset prices over a sustained period in Australia have been very strong. House prices are still being quite favourable in Australia. There's been a little bit of softening in that, but it's still quite a buoyant market. We're still short on supply of houses, and so that's underpinning asset prices. And then you've got unemployment, which is helping the consumer. What's
the outlook and the appetite for loan demand amongst the SMEs? Because that share of the market has fallen to 27.6% by August from 28.1% last September. Is that a nod to slow business credit growth and fierce competition? And what is NAB doing to turn that around?
Yeah, SME lending is our core business, and so our business bank, which is really a medium-sized business bank, is the core of our franchise, and it's an incredibly powerful business that grew by almost 9% in its lending growth last year. System credit growth for business lending was about 6%. When you aggregate the market share stats, you're talking about all of corporate lending, and so we're very focused on our medium-sized business, our small to medium business, and that's been growing quite nicely. The outlook for credit, we've had sustained periods of time, up until about the last 3 years, where housing credit had been outstripping business credit in Australia for a long period of time. We've now had 3 years in a row where business credit's been stronger than housing credit, and we expect that to continue next year. So, business credit might have been 8% in our last fiscal year. It probably slows to about 6% in the next fiscal year, but still quite healthy numbers. And, we've got a business that's really well placed to capitalise on that.